Welcome back to Coinscrum Markets, and I am back today with another episode of RFQ with our friend Matthieu Jobbe-Duval from Coinlist. Matt, how are you?
Hi, Teana. I'm great. How are you?
I'm really good. It's great to see you.
Great to see you too.
So before we kick off with this week's market news, I'd like to hear a little bit more about the launch of Flow. It seems to be an NFT extravaganza.
Yeah, so Flow is a fairly well-known project in crypto. They are. It was built by the people who gave us CryptoKitties a few years back. They then went back to the drawing board and designed the Flow blockchain, which is going to be the blockchain for NFTs, or at least that's the promise. And unlike many crypto projects that we know, these guys have actually delivered on that promise by getting a license from NBA a few months ago, allowing them essentially to issue NFTs based on NBA, what they call moments. To cut a long story short, you can buy short clips of NBA All-Star action, and those are NFTs, so you can then exchange them with your friends, just like you would do with a baseball card, for example. It sounds odd, but it's a roaring success. They are selling out those moments every time that they put them on the market. And the Flow blockchain, that is going to be the layer upon which those will be exchanged for NBA, but also for other, of course, projects that they are working on, has done an auction on Coinlist about 3 months ago, where Flow, the token, was sold at around 38 cents per token. The token launched last week on Kraken in an extremely hot market. The token opened at $6, rallied to $12, and is currently at $9. A phenomenal story, of course, of great returns like we're used to in crypto, although it's not 2017, because now you really have a real working product with people using them and exchanging them, and insane stories of people making really great investments through these NBA moments. So a fantastic story, and just much more to come, we think, for the Flow team.
That's really exciting, and probably a really great time to launch this, because the market has been pretty nuts, right? So
100%.
let's dig into this week's market news. So since the start of the year, there's been, and we're starting to see some gyration going on whilst Bitcoin holds in a range. So let's what are the drivers for this? Let's kick off with ETH that's breaking, new all-time highs. Like, what's driving this? Is it Elon and his Lion King meme, or are there other things at play here?
Yeah, it's hard to keep track, Twitter action between Wall Street bets and Elon Musk is really crazy. ETH has been a bit of a lagger on last year's rally. The ETH to BTC ratio, which gives you the value of one ETH versus Bitcoin, spent most of the year under 3%. When back in 2017, you were, in the high 5-6% on a regular basis. So ETH struggled to rally while Bitcoin was kind of getting its spot in the sun, going from $20,000 to $40,000. So this is long overdue, in a sense, for ETH to start coming back. What are the drivers there? It is hard to say. In a sense, you could say, well, institutionals have started putting money on Bitcoin. That is, by most metrics, the reason for the strength that we had in the last 6 months. ETH has not had that money. That money now is starting to come in the space. That's number one. It was long overdue. It was that ratio was on the lows. It was due to bounce. Number two is ETH2 has launched a few months back, and that ETH2 takes ETH, the token, and locks it. You can see it as really locking it in a side blockchain called ETH2, and it is going to be live at some point. But right now, that ETH is just away. The supply is reduced. It is earnings taking rewards and blah, 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 but it's not there to be traded. That's number two. Number three, CME is launching the futures on Monday. So futures on ETH and perpetuals on ETH have been commonplace in crypto for a while. BitMEX, Deribit, Binance, anywhere you look, you can trade ETH futures. But now,
institutionals aren't trading on those platforms, right?
Not necessarily. Exactly right. So now CME is delivering this. ErisX had futures on ETH as well, physically delivered for about a year, I think, but they never really gained too much traction. So the fact that CME now is getting the green light to ship the futures is also reasonably bullish. And finally, I think we're also seeing what the ecosystem that ETH sustains, which is this ecosystem of DeFi and of dApps, DeFi representing really 90% of what goes on the dApp world, has dramatically rallied recently, and that has also lifted the layer token, which is Ethereum, of course.
Yeah. So with this, I would have called it a DeFi bounce back, but it seemed it's volatile, as we know. So in the last week or the last couple of weeks, who's gained some strength and who's lost their luster?
Yeah, so it is interesting because in such markets, a token that is a lagger is only up 100%, in the last couple of weeks. So, some tokens, for example, Chainlink, which was a market, favorite over 2019, 2020, the Chainlink army, on Twitter and all that jazz, has only gone from $11, back in the lows last summer, to $24, which is an amazing return, but still disappointing. Sushi went from 80 cents to $14 today. Curve, which was at $3 during their launch and their farming project back in October, November, $3, now is at $30. So you see those returns and like, what is going on exactly? DEXs are trading, and the volume is there, the liquidity is indeed on those platforms, but nothing really has changed. No major features, no big bugs fixed, nothing really new that would justify a 3, 4, 5x return. My intuition, my belief is that for such a rally to happen, first, you don't need that much money because these are very liquid tokens. The market cap is high, but really the amount of tokens that is in circulation isn't that high. The investors are still locked by and large, and the tradable tokens are tokens that are obtained by farming. So it is a slow trickle. So to lift the market, you don't really need that much buying power to get those tokens prices much higher. So I think there is a bit of maybe institutional involvement in Bitcoin that we saw last year that is now started to diversify. And a little bit of money moving from Bitcoin into DeFi would really be a game changer for DeFi prices, which is what we see while Bitcoin has stayed stable. Now, rallying in the last couple of days, but mostly, as you said, in the same range. So this is, I think, a likely theory, and at least nothing else that I can see that could explain such a dramatic multiplier on valuations.
Right. Well, and Ethereum challengers are also up. I just looked earlier. Polkadot was hovering between 16 and $18 today. It's been really strong over the last couple of weeks. So they have quite an active community, unlike some of the other Ethereum challengers. Do you think that this is just a reflection of the price of Ethereum? Is this, a surge around layer one protocols? What's driving this growth?
Yeah, so Polkadot has a very interesting story. It is very, very hot. The promise is great, these side chains and what they will allow crypto as a whole to do in the future. In Asia, especially, there is a lot of interest to get into Polkadot and to invest more and to buy more tokens. Now, I don't think that is a story for layer ones. Just like the story for DeFi is kind of across DeFi. Everybody, the rising tide is lifting everything. Tezos is not up. EOS is not up. Solana is, probably the best performer on layer one.
So let me ask you then, is that a community thing? So if I look at the Tezos community versus the Polkadot community, one could argue that one is much stronger, at least at the moment, than the other. Is that an element that's driving this? Is it just belief?
I think belief and also the trend, in a sense. Crypto is really with the whims of the market. Just a year or so ago, it was ETH killers, and ETH is not going to survive the faster blockchain. And now we're like, well, actually it dominates by miles. So Polkadot is extremely hot, which attracts developers, which attracts new dApps, new ideas, on active discourse, which attracts a higher price, and the positive loop repeats itself. And the opposite is true for other blockchains. Not much is happening. They have money. There raised a lot of money a few years back. The token has rallied. They have money to disperse and to pay developers through different means. But if there is not that, spark, it's very hard to light up the fuse. So layer ones, yes, most of them very well funded, but really some of them are very good at staying hot, staying in the news, and staying attractive for developers and getting a strong community, and some of them less so.
Yeah. So last thought on the market this week around the institutional space, we're still seeing quite a lot of news coming out around, different large investment announcements. How is that impacting both the volume and the volatility in the market?
I mean, look, I think what we've seen last summer, the start of what I like to call the Bitcoin legitimization. The story is not, is this a bubble? Is it safe to invest in Bitcoin? Why should I invest in Bitcoin? It is, what do you mean you're not investing in Bitcoin? Why are you not in this market? We have the major PMs, very large asset managers, even BlackRock saying Bitcoin is for real, and we're working actively either to get an investment in, or we are already invested. And that changes everything. That changes the kind of view that we had on Bitcoin price. You can put that in the bin and restart, because once you have that legitimization of the space, now we have a real asset class. And that changes the whole rule book. It's a 10x, maybe 100x on the price. And Bitcoin really starts to attract investment across the board. Think of the fact, for example, that a private client at JP Morgan or Goldman Sachs, someone very rich that's been, has a private banker at JP or Goldman, calls him up and says, hey, I want to buy some Bitcoin. Right now, the answer is, we can't help you, sir. We can't help you. Okay, so create an account on Coinbase or Coinlist, maybe, if he's a little adventurous, and do your own research and buy Bitcoin yourself. Someone, very rich, 50, 60, 70 years old, is not going to do that, most likely. Soon, those banks are going to have custody solutions, either built by themselves or whitelisted from a custody provider, an exchange connectivity, maybe through CME or maybe through a physical offering. And now that pot of money can invest in Bitcoin directly. I'm not even talking about the ETF. That is a game changer. That is a lot of potential investment that come in the space. And what needed for that to happen is not the infrastructure. The infrastructure has been there. It's really the legitimacy of Bitcoin as a real investment. It's for the guy at Goldman saying, yes, that's a good idea, rather than no, stay away. These are tulip bulbs. So this is changing, and the ramifications of such an event, of the change of narrative, we're only starting to see and are going to continue throughout 2021.
So let me just challenge you really quickly on the infrastructure statement you just made. So over the last couple of weeks, we continue to see the marketplaces where we go that are available to us to buy and sell, still having problems. Going down, latency, overloaded tech stacks. We don't know what is the issue, but there's still major players that are having trouble with the traffic. So let's say that these high net worth individuals are coming in. They now have access. They now have the appetite. All systems go. Is the infrastructure really there?
So from a trading standpoint and high frequency trading, not even close. As in you're looking at latency in the tens of milliseconds, when on NYSE or ICE, you're looking at 100, maybe 1,000x less than that. So from a trading actively, and as you say, you don't even need to trade that actively when market roofs, everything goes down. No, but from a custody standpoint, which is really the crux here, in my opinion, because when these guys want to trade, the private guy is going to buy, a couple $1 million of Bitcoin. He's not on his screen trying to refresh and log in. Most likely Goldman Sachs is going to turn around and go to Fidelity, go to Coinbase, go to Galaxy and say, hey guys, can you make me a price on that size? Maybe they can click themselves. The trading itself is maybe still a little pain point, but the custody and the being able to safeguard that position, safeguard the Bitcoin, the ETH, and to guarantee the client that, yes, this is going to show up in your Goldman Sachs or JP Morgan interest statement at the end of the month. Yeah, that is there. That is possible. You're right. The tech stack, because everything is built on cloud, it is still weak. It is still fragile. And hopefully, it will improve.
Yeah, well, last week I joked that, Elon Musk broke crypto again. So, those types of hype cycles we're still struggling with, but it would be nice to see that infrastructure improve a little bit and become more stable during these hype periods.
I was going to say that infrastructure piece. I mean, Coinbase and Binance and all these exchanges are working super hard to fix this, because every second that they're down is trading revenue they're not capturing. It is just that the load and the number of users has roofed it's a great problem to have. The infrastructure needs to follow, but I think the acceleration we've seen in the last 6 months, nobody expected, and clearly exchanges have not spent enough time optimizing for multiplied of loads versus what they had in 2017.
Yeah, brilliant. Well, watch this space. We'll have you back in a couple of weeks, and we'll see what other weird and wonderful things have happened in the meantime.
Exactly.
Always a pleasure to see you, Matt. Thanks for coming back.
Thank you, Teana. Bye-bye.